Hi, everyone. Chad here with Living the Dream Real Estate Group. And today, Scott and I on the podcast, we are going to be looking at 2023. We're going to be looking at all of our statistics, and we're going to be looking at some of the things that happened in 2023, especially when it came to all of our rate hikes and rate announcements that came from the Bank of Canada and how that had effect on our marketplace. We're going to look at our inventory. We're going to look at some of how our pricing changed throughout the year, especially when it comes to single family homes here in the Okanagan. And we're also going to look ahead to what's going to happen in 2024, what our prognosis is for 2024, as well as some of the announcements that came out from the government with British Columbia with regards to the speculation and vacancy tax, as well as our short-term rental announcements. So we're going to dig into a whole bunch of 2023. So let's dig in. Hey, thanks for joining us again here on the Living the Dream podcast as we talk about all things real estate, all things numbers, and all things 2023. And as we look back to this last year, as Scott and I, we were just going over some stats over the holidays and looking at how 2023 was, and wow, it was a little unpredictable. We had a lot of really crazy things that were happening in this last year and in 2022 as well. Some carryover of rate hikes and some holds and how that affected the market. So we're going to break it down. We're going to look at a few different things. One, we're going to look at some of our stats when it comes to how our rates did, what happened with the rates, what happened with our inventory in that sense. And then we're going to look specifically at that at the inventory, just to see how that was affecting our marketplace and what we saw in that. We're going to look at some of the pricing for the homes, the average price of homes, especially for single family homes here in the central Okanagan, just how that was impacted. And then we're going to look at just what we think about what's going to happen this next year, what we're anticipating, what we are looking ahead to for 2024. So, Scott, how was it? What was our year like?
It's interesting, and there's so many moving parts to this year, with the Bank of Canada rates continuing to climb as we entered into the beginning of the year and moving into where they hit their height so far in July. It's nice to see that they've held them since then, but that was definitely one of the major effects. And I think we really truly saw the effect of those rates coming late September and then through the winter months. So October, November, December, the last quarter has certainly been affected in terms of the Bank of Canada rates. Of course, you've got the variety of other things that happen with the fire season that we had, unfortunately. And then, of course, the fall announcements of a couple of different legislations that the BC government has brought into play, which is going to affect certain parts of the market and certain things in certain areas and everything else like that. So a lot of fluctuations this year and a very interesting year, to say the least.
And, when you bring up those and when we talk about that, the one biggest thing that is so interesting about all of these things that we're going to be discussing is that they're all outside factors that of course we can't control, and those are often the case in real estate. But this year specifically was all about outside influences that were impacting our localized economy, especially with our home pricing. So let's look at the first one here. I'm going to pull up this stat, and this was more reflective of just what we saw in the rate hikes when we saw them and how it was impacting our localized markets. So as we looked through this last year, we ended up with, and I remember back in December when I was looking and when we were analyzing 2022, one of my biggest fears was that we were going to be heading into the new year of 2023 with a whole bunch of inventory. And my fear is that there was going to be so much inventory out there that we were going to get stuck with that, because I just didn't think that we had enough buyers in the market to help bring down the pricing. So it was going to be interesting. So here's what we had. Beginning of January the 25th, we ended up with Tiff Macklin from the Bank of Canada came out and he gave us a 0.25% raise, but it was with one little caveat to that announcement, and it was the hold. Remember that when he said we're going to raise these rates and then we're going to hold on to see what happens.
Mm-hmm.
And it was almost instantaneous that you could see the result in the amounts of inventory that we had in the marketplace. And we'll see that when we look at this next in one of our next screens. But we had the 11 months of inventory at the end of January. And then in March, so we had this hold. We dropped significantly. It was almost like the bottom fell out. You remember that?
Yeah.
On how the market just suddenly just shifted. So we saw our pricing go from, and this is for single family homes. So this is the medium home sale price for a single family detached home in the central Okanagan. So we could extrapolate this and we could slice it down to so many different angles, but we had to pick a specific area. So we just took West Kelowna, Lake Country. So that's the central Okanagan. And when we do that, we ended up with a medium home sale price of $877,500. That, because of that inventory, supply demand, we saw that drop. The amounts of inventory dropped to 5 months of inventory, and our pricing spiked up to $950,000 for a single family house, which was pretty crazy. And when we saw that rate hold that came in March, we could start to see things coming together. The economy was kind of kicking along. We ended up with some good numbers coming out with jobs reports as well as inflation. So it was a pretty good spring from what we saw there.
Yeah, absolutely, Chad. And I think it was interesting because when we get to talking about a little bit more about months of inventory, we certainly see a similar cycle over the years, and we can go back quite a few years, but even in the last 4 years, we've seen a very similar cycle coming into the spring that, not just the seasons are renewed, but people's invigoration of buying and getting into the market and looking at homes seems to be renewed as well as we enter the spring. But the interesting thing was exactly that hold came out, and all of a sudden buyers started to come out of the shadows, I guess you could say. And we saw a lot of things moving at a very quick pace again, which I don't know if a lot of us were necessarily expecting that coming into the spring, but we saw that. And then as the year progressed down, as we got into July and they looked at, well, we still need to get a hold of inflation. They had a couple more increases. And then as we hit September, I think the reality of the rates struck again, and people were fearful that they were going to continue to go up. And so that's when we saw levels of inventory start to creep back up in late August, early September.
Mm-hmm. So as of our last announcement, so we had some holds. We had increases over the summer, and that brought us up to the 5% that we had as of July. And September, October, December announcements all were with holds, so we were at 5%. So we saw our inventory sitting up right around the 11-ish months of inventory. So that was really interesting to see. So let's look at one of our next things then, if we check out what our inventory was like. So if let's pull up this one here. This is going to be there we go. Here, look at this for inventory over the last few years. So I went back to 2019 to look at some craziness. And when we think of our inventory, we really look at it from supply and demand. More supply, back to basic economics, the more we're going to have softening in pricing because there's just more availability. You take down that, you create that scarcity, you make the homes very hard to find, and all of a sudden the pricing just goes up dramatically. So as we get into this chart here, we're seeing that, of course, we ended up with, in January of 2020, we were on a spike. And this is kind of what we start to see come January. Everybody gets the New Year's bug to think about what they're going to be doing next with their home or with their abode, whatever that is. And all of a sudden, in March, right at the peak, we were at that 11 months of inventory, and it just, with COVID, it just dropped way off. And we ran into almost a year and a half, 2 years of very, very low inventory of less than 2 months. And for us in real estate, that is just, that's really difficult. That's when you're going to see a lot of those multiple offers. You're going to see people putting in a lot of the bidding process. We're going to see just that scarcity just makes things go bonkers. And that's what we saw right through until the Bank of Canada came out with its first rate increase, which was right back in here. And it's so crazy when we start to analyze when the rate hike started.
Yeah.
If you remember back to our study of 2022, right in March, our inventory just took off like a jet plane because we ended up with a lot of people that were just, I don't know what to do. My rates are getting too high. I need to sell. So that's where we've ended up with for the last year and a bit. But as we look into this and just more specifically about what we were talking about is we ended up right here at the end of January. That's where this rate increase came. And we saw that that was that rate hold and of the 0.25% and then the rate increase of 0.25% and then the hold. And then we saw this big strike on inventory.
Well, and I think the one thing for people to understand, consumers to understand out there as well, is that we will see levels of inventory will be fairly cyclical, regardless of what we're showing on that chart. If 2020 to 2022 are a little bit of an anomaly with COVID and everything else that was happening in there. But the one thing that you saw that resonated in those years, not unlike any other years, is that in January, our months of inventory are always a little bit higher than everywhere else in the year. And as we start to progress into March and April, we'll see those numbers drop. And a little bit of that is adjustments with listings. It's adjustments with people putting their home on the market when we're out of the quote unquote bleakness of winter, I guess you could say. And, things are starting to renew and people will start to bring their inventory back onto the market at that point in time. But we also see the buyers come out of the woodwork at the same time. And so March through June will tend to always be those busiest times for home sales.
Right. And so when we look at those home sales per year, this next chart is going to be really interesting. So this is, and this is why sometimes when people are asking the likes of Scott and I for professional opinions on what we're going to expect and what we're going to look to for the next while, it gets really difficult for us to predict because it's so dependent on outside factors. As you can look to these last few years, these last 5 years, last 6 years, we have so many different parts that are going into this. We have this anomaly here, which was, let's get back over to 2020. This was our big arc that we had for COVID. And this is where we are sitting for right now in 2023. A sharp, distinct drop off at the end of the year. And this is in large part with some of the fatigue that was coming in from what our rates are at. So yeah, let's talk this up for a little bit.
Yeah, absolutely. Well, and I think, when it comes to sales over the last couple of years, we're starting to get back into very similar sales numbers in general that we saw in 2019, 2018. It was interesting. I was reading a report and they were talking about inventory levels that we have right now, that the last time we saw these actual inventory levels were back in 2015. So we're going back 8 or 9 years at this point in time. And one of the very interesting things with that is, obviously, again, we've got that anomaly with COVID from 2020 to 2022. But for the most part, it's proved pretty similar in terms of when we start to see those drops, we'll see them come in the winter months. And we'll see them start to spike back up again when we hit that spring, summer. Even fall has generated some pretty good home sales throughout the last year or two. But we're starting to get back to some of those levels that we saw in 2018, 2019, prior to COVID really taking a hold of the real estate market.
Hmm. So as we take a look at this next graph, this is going to be our historic sales price trend. And as we have looked at this last year, from February of 2023 and onwards for the last 12 months, we're just now, and of course, we're just at the beginning and still early on in January. So all of our numbers are going to be, they're going to be skewed higher for this. But this is where we're coming from, is that we are already starting to see that trend higher into or just over $1 million again. And we had been hovering just over. At one point, one of our highest points was back in May when we were at 1,060,000, I think was the height of it.
Yeah.
And now we've already started to surpass that. So as of the last little bit of data here, it's looking like we're at 1,050,000. So we're right back to where we were post 2022 or pre 2022. So we're already starting to see those numbers starting to pick back up.
Yeah, and the pricing in general is an interesting conversation that I've been having with a lot of my clients in terms of, with the softening of the market and inventory going up a little bit, a lot of the questions I'm getting is, okay, Scott, now are we ready where we can go in and we can lowball and we can get really good deals and everything else like that? But the interesting thing when I was looking at data based on original list prices versus overall sale, the actual sold price, we're still only really seeing about anywhere from about a 3 to 6% difference in between those list prices versus those sold prices. And so are there potential deals to be had out there? There always is, and it depends on the motivation of the seller and everything else that's happening. But from a buying perspective, we're seeing our numbers and our sales numbers still hold fairly true to what they were. We saw about a 10% dip from April of 2022 when the market was at its absolute best. And we've seen a little bit of a dip, about 10% over the last year and a half, but it hasn't been significant. We're a little bit sheltered, of course, in the Okanagan because people want to live their dreams out here. So that's a big part to it.
That is definitely the case. And we still have, based on one of the studies that I was looking at again for just this last year, where we have over 40% of all of our purchasers are coming from other areas to move here to the Okanagan. So it just stands to the fact is just that we do have a very great, an amazing place for people to live. Although the pricing is a little bit on the higher side, the tendency that we're seeing is that it's more folks that are coming with sales of homes that they've already had paid off from other areas or other jurisdictions and coming here with the cash to be able to purchase those homes and not having to worry about the rate increases or the rate hikes. So as we had our mortgage specialists on not long ago when we were looking ahead to what was going to happen in this next year, all of us agreed that we were thinking that we were going to see no more rate hikes, but we were going to be seeing some holds for the first quarter, probably into the second. And then after that, we started to see the change and that we're probably going to see some rate decreases. And one of the thinking or one of the thoughts that I had on this is just that we're going to start to see some rate decreases come the beginning or mid of the second quarter. And I really think that that's going to help us with some of our pricing, and it's going to help us with some more activity. So I am really thinking that soon, even right now with the inventory, where it's at, this is really back to what we were talking about just a few minutes ago, is that it's really getting to be a time to purchase.
Mm-hmm. Yeah, I think levels of confidence in general are starting to come back up a little bit. It's deflating when you see rates go up as much as they had from the end of 2022 all the way through 2023. And what we're already seeing is when we were talking to our mortgage friends, that with the bond market coming down, those fixed rates, we're already starting to see 5-year fixed rates under the 5% mark at this point in time. The US has announced that they're looking to decrease their overall rates. I believe it's 0.75 of a point. And Canada usually tends to follow suit with that as well. So with confidence being back in the rate market, It's going to bring confidence back into the buying market as well. And I, personally, I feel like we're going to see that initial decrease potentially by March. That's my own personal feelings. That might be optimistic, but that's what I would love to see. And I think that's really going to spur a spring market for us, even more so than spring normally does.
Mm-hmm. Now, a couple of things that did happen in 2023, because this is still just part of our review of and some forecasts for this next year. But as we look at, to your point of some of the things that have been affecting our pricing, is we think back to this fall. The fall brought on a few different announcements, at least two significant ones that have had created a lot of instability or a lot of, call it, uneasiness in the marketplace when it comes to two things. One is the introduction of a province-wide short-term rental stance that the BC government has taken, with that starting to come into effect here very soon, or already. And the other being with our vacancy and speculation tax now being implemented in a number of more communities, especially here in the central Okanagan.
Yeah.
So the first one, let's talk about the short-term.
These ones are, I don't want to call them a bone of contention, but they are interesting, and it really moves the needle and the goalposts on a lot of things that we talk about with our clients. We talk about investments and new construction projects that come out, and how can these be used for revenue generators and all those types of things. And then for this legislation to come forward, and I'll talk about short-term rentals first, is that completely moves the goalposts on a lot of things. And it's not only buildings that were built over the last couple of years that were zoned specifically for short-term rental use. Obviously, a lot of people in the market using their primary homes or secondary homes that they had here to take advantage of that as well. It's changed a lot of people's investment, because when you're looking at the numbers, you're looking at, okay, if I buy it for X amount of dollars, I can recoup that throughout maybe that 3 or 4 month short-term rental period, and then potentially rent to students or people that are looking for longer-term rentals in the winter.
Mm-hmm. Yep.
That's all changed now. And so how do people potentially recoup the investment that they initially put in? A lot of it's a bit up in the air as well. We know what the provincial government has come and said. By May 1st, everything is off the table. There's no short-term rentals unless it's your primary residence and you're registered and you hold your license. But the municipality still has some decisions to be made on certain buildings and certain developments that were zoned and specifically built for short-term rentals. So there's some stuff that's up in the air that we need to get more answers on to be able to help advise everybody as to how are we going to actually move forward with this.
And to that end, let's be honest, is that a lot of the municipalities were caught off guard a little bit on this too. There was some pre-announcement, some consultation that had come up with some of the municipalities, but for the large part, they're basically flat-footed on, all right, we need to do something about this. So for instance, in Kelowna, they came out with an announcement November the 21st that says that we are going to be waiting for some more information to come from the provincial government as to how we're going to move ahead with our short-term rental legislation. So there already is the same standards that they've always had, in that they instituted from the beginning, that they've said that it has to be a primary residence. You do have to get a license, and it has to be with a proper zoning. So if there was zoning situated or pre-authorized by the municipality for the designation of short-term rentals, it's still being allowed, but there is some potential changes to that. So for investors that are looking at the potential of having a unit or a condo, a townhouse that would be used primarily for short-term rentals or for that investment, are really starting to second guess their options in this, because the rental that they're going to get from just a yearly rental or a long-term renter is just not necessarily going to cover the investment, or it's not going to be as lucrative as it would have been potentially for that short-term rental investment.
Well, and it's interesting you bring condos up as a specific, Chad, because I think that's where we're going to largely see the market affected is in that condo market. And even in December, I was looking at some numbers, and the increase in inventory alone in December has gone up 36% from last year in terms of condos. And that's very reflective of what's happening because there are a lot of investors that are looking at it and saying, is my investment still going to be able to be maintained, or am I now upside down on this? So a lot of moving parts to it still to be determined for sure.
Yes, and just with some of the construction, there is significant amounts of construction that is underway here in the central Okanagan. And as that gets under or through to completion, we're going to start to see, I think, some softening in those condo prices just because there's going to be a lot of inventory. Many of those are going to be offered towards rentals, which is great for people looking for affordable rentals. But I think from a standpoint of condos, you really want to make sure that you're purchasing well in this coming year if you are acquiring a rental. But there are still some really good deals out there for people that have students that are coming into going into university, or that are looking for, if you want to have a 4-year virtually rent-free option of a condo or a townhouse. This could be definitely an option as we see that pricing soften. Even with the growth that you're going to get from that, you can offset that and come out at the end of the day with a great free rental for your student that's looking at their house.
Absolutely. And I think it's really important it's not just about looking at, okay, what is the market offering, but how can you work a plan to make sure that if it's for 4 years that you need it for, well, then look at it for 4 years. But is there other parts of the plan that we can help sit down with you and figure out what makes the most sense and really truly run those numbers to make sure that it's working to your best advantage?
Mm-hmm. And to the second big announcement that the province of British Columbia came up with, or that announced in the fall here, was the expansion of the vacancy and speculation tax. So in the Okanagan, in the central Okanagan here specifically, we had that instituted in West Kelowna and Kelowna, but that has now been expanded to Penticton, Summerland, Vernon, Lake Country. We're now having a lot more of impacted areas, and I know specifically from a lot of our clients that have purchased here in the North Okanagan or in Lake Country, they had purchased here specifically because that vacancy and speculation tax was non-existent. And we are still seeing some of that marketing that's out there that says that the vacancy and speculation tax is not here. Well, it definitely is. So starting in 2024, starting just a few days ago, from now on, you need to be in your home for 180 days or 6 months of the year, abiding in it, or have somebody living in it for you, or maybe renting it. But if it's not, then there is the susceptibility of paying the tax, paying the vacancy and speculation tax.
Yeah, absolutely. And to outline that for our viewers here, with the speculation tax, so if you are a Canadian resident and you've bought a vacation property out here, or a property that you're holding on to and you use every once in a while, that speculation tax is outlined as 0.5% of the total assessed value. So looking at your BC assessment, your total assessed value of your property, say for instance, it's $1 million, that speculation tax would be $5,000 per year. If you are a foreign or somebody that doesn't hold Canadian residency, ultimately, that tax is 2%. So just to give people an idea as to that's what ultimately you could be dealing with as of your 2024 tax year, which will ultimately come into play in January 1st, 2025.
Mm-hmm. So to our viewers and our listeners, if you do have some questions about how that is going to be impacting you, please just get a hold of us. We have done some podcasts that are on that specifically. So go back into our catalog of shows or podcasts, and you can listen to that and you can watch that. And we are going to be having some more speakers that will come on and speak directly to those things as we get more information on it. But it's going to have some impact on how things are going to go for this next year of 2024. So as we look ahead, we've already talked a little bit about our prognostication of what we're thinking is going to happen in 2024. But by all rights, it looks like it's going to be another good year. I think that it might be still a little bit slower than some, but as we start to see economy pick up, as we start to see our inventory start to come down a little bit more, we're going to start to see some more good things happening in the marketplace. So it is truly a great place to come, put some roots down, and be a part of here in the Okanagan. Any other thoughts that you have for us for 2024, Scott?
Well, I think, and I think that the term slower is relative, right? It's definitely slower than what we saw in COVID, because that was a market that we've never seen before. Prior to that, we're starting to get a little bit more back to that, which is more of a sense of actually what does happen in the real estate market. I think the biggest thing that people need to look at is really look at what your plans are. Every situation and scenario is different, whether you're selling a home or buying a home. A lot of it depends on what your plans are. And for you to be able to sit down and talk with a professional, not unlike Chad and I, to be able to get an understanding of, this is what we see from our end, but what are your plans for you, your family, your investments, whatever the case may be, and really be able to sit down and talk about what makes sense now and what potentially makes sense later. And so, for me, I personally see us having a busier spring. There's a little more confidence, especially from buyers, which is going to help the inventory levels that we're dealing with. And it'll be interesting to see, but I think with rates starting to come down, that's gonna create a lot of confidence for sure in our market.
Yeah, it's going to be exciting. We'll see how it goes. But until next time, we, of course, welcome all of your questions, and thank you for all of you that have sent in your questions and passed on some comments. So please do keep those coming, as we will get to answering those in coming podcasts. We are looking at putting out a new session every week, or as many as we can on a weekly basis. So keep posted on what we're doing, and let us know how you're doing and how we can be able to help you. So for all of you that are living your dreams here in the Okanagan, thanks for watching, listening, and we'll talk to you next time.